Today, I'm going to go over something you see all the time but may not fully understand. We're going to talk about the boxes that represent prices on trading charts. In the biz, we call them candlesticks, and they contain a surprising amount of information for just a few lines. These candlesticks show four distinct numbers: the opening price during that time period, the closing price during that time period, the highest price during that time period, and the lowest price during that time period. The space between the opening price and the closing price is called the body, and the sticks are called the shadows. The body of the candlestick will look different depending on if the exit price was lower or higher than the entry price. Different exchanges have different methods for distinguishing the two scenarios. Let's take a look at an example to see what I'm talking about. Here's the XMR BTC Monero versus Bitcoin chart on the Poloniex exchange. The candlestick setting, which might be called the period on some exchanges and software, is set to 15 minutes, which means each one of these candlesticks represents a 15-minute period of time. On Poloniex, if the body is green, that means the closing price was higher than the opening price. The price increased over that time period. If the body is red, that means that the closing price was lower than the opening price, and the price decreased over that time period. Different exchanges distinguish the two types of bodies in different ways, but more often than not, it's pretty obvious by just taking a look at the chart. You can hover over a candlestick with your mouse and see the values of all these different numbers. You'll see the open price, the close price, the highest value, and the lowest. If you have any questions or more information to add about candlesticks, let me know in the comments. Bye.